Europe's common currency went down shortly before the release of a preliminary data on inflation in the euro area, largely due to the downbeat forecast. It seems a pre-launched dollar decline has come to an end. Now the US currency is likely to turn positive. Data showed that annual inflation in the euro area cooled to 2.4% in November from a 2.9% a month ago, while economists predicted a fall to 2.7%. The figures reinforced market expectations that the European Central Bank would be the first to cut interest rates, not the US Federal Reserve. Notably, the prospect that interest rates in Europe would be higher than in the United States at some point was the main reason for recent capital flows from the dollar to the euro. The only thing that prevented the single European currency from falling deeper was data on unemployment that remained unchanged. Economists expected the indicator to rise to 6.6% from a 6.5%. In light of the latest data, subsequent comments from the ECB officials are of particular importance. After all, inflation in Europe has been easing for quite a long time and at a fairly rapid pace, so the regulator may well start lowering interest rates as early as December. If investors bet on it, the euro will suffer heavy losses. This process will probably stretch over several months. Europe's common currency is expected to gain strong downside momentum, thus dragging other currencies down. According to the trading chart, the euro has reached the psychological level of 1.10 and is currently pulling back against the US dollar. At the same time, an uptrend remains intact. The euro will resume gains after the price returns above the 1.10 mark. A strong buy signal will be generated if the price consolidates above 1.1050. Until then, the market will remain in a correction mode, with the euro probably sliding at least to the level of 1.09. Speaking of the pound-dollar pair, the volume of long positions decreased near the resistance level of 1.27. As a result, the British currency pulled back and then moved sideways. To develop a full-fledged correction, the price needs to stay firm below 1.2650, thus sparking short interest. In a bull case scenario, if the price rises above 1.2700, sterling will head for a new local high. And that's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.